probably a sturdy girl to carry an 80-pound dog. It's about a half a mile. You do that a couple hundred times a day, it begins to add up. Today they lost their cat, and I'm thinking that's a good thing, right? All right, let's talk about the mystery charts and methodology. And actually, we have a new mystery chart this week. And you can see we had lots and lots of Landry light. And we still actually have Landry light. If you squint your eyes right here, we haven't quite touched that EMA just yet. This is a 30 EMA, by the way. Landry light simply lows greater than the moving average. Notice that this thing really took off, really sharp uptrend. And then it made a bit of a minor double top, but that's okay. I like the double top knockout. Double top knockout, you have a minor double top in the market, and then the market has like a knockout move. But in this case, the knockout move was over several days. So if you can kind of use your mind's eye and compress these into like one big fat bar, you can see that's a pretty substantial pullback there, okay? And there's your pullback. So it has a bit of a double top knockout look, and it's almost, if it drops a little bit tomorrow, it'll be a Landry light pullback. In fact, I think I grabbed this chart before the close, so maybe it isn't officially a Landry light pullback. Landry light pullback should just need 10 to 20 bars of Landry light. In other words, lows greater than moving average, and then you come down and touch the moving average. Years ago, as I've said ad nauseum, if you go back to 90, I always forget, 95 and 96, I think 96 Stocks Commodities article that I wrote. I talked a lot about the Landry light back then, but back then it was called daylight. Well, it wasn't even called daylight then, but anyway, daylight became Landry light. And the point I was getting to is back then I used a 20 EMA. I was kind of enamored with it, for lack of a better term. But in more recent years, I've kind of fallen in love with this 30 EMA. And you'll be amazed at how many trends you can capture just by following the 30 EMA. And also, as I often point out, especially in crypto, you can avoid a lot of crappy markets by staying out of the market as long as the highs are less than the moving average. So when you have negative Landry like back here, this isn't a fantastic example, but you can see if you just stayed out doing a negative Landry light, you would have avoided a lot of a substantial sell-off in here. And then let's chop it back and forth. It means the market is choppy. But anyway, I'm just fascinated with how this simple little concept can work so well. And it's no holy grail, believe me, but it can really help to keep you out of a lot of trouble. And usually, I'd say 95 to 99% of my analysis is done with blank charts, meaning no indicators whatsoever. And then I find, oh, just got to learn something. I find that the moving average and the Landry light can really help those, especially newer to trading, to, I wouldn't say quantify things, but to kind of qualify things a little bit and make it a little bit easier to see, as opposed to just eyeballing the charts. And I know that a lot of times, especially based on kind of the feedback in Facebook, people are like, well, what do you mean by eyeballing a chart? It's like, well, in this case, it's a lot easier to show you the moving average and the Landry light, and it's a little bit easier to see how it all works out. Also, you can write scans for pullbacks to the moving average. Anyway, entry is here, stop is down here, and the IPT is up here. So I'll follow up on this one, good, bad, and indifferent. Couple of mystery chart reveals this week. This is SMR. And you can see it was kind of in a gradual uptrend. Lows were kind of making higher lows, or was making kind of higher lows. And then you can see it really began to accelerate in more recent times. And notice the Landry light. We have almost 60 bars of Landry light. And I'm going to kind of beat the dead horse here. And it's, by the way, I know I beat the dead horse a lot, but every time I don't say something, I get asked again. So just to get everybody up to speed, Landry light again, lows greater than moving average. This counts the number of bars. It's not magnitude. So you can see, even though the price is coming back into the moving average, the Landry light continues to rise, and it goes to 0 as soon as you intersect the moving average. And now in this one, we have 1 bar of downside Landry light. So this is SMR. Now it's kind of interesting. You can see it did pull back against the moving average. This is the whole pattern in and of itself. 10 to 20 bars of Landry light, pull back to the moving average. That's it. Okay, it doesn't get any simpler than that. And that's one thing that amazes me. And a while back I did a webinar, and I've done a few of them actually, now I'm thinking about it, where I went in and looked at all the big recent winners, and they were all Landry light pullbacks. There might have been other patterns like TKOs or DTKOs, the double top knockout we just talked about, stuff like that. But almost all of them were also Landry light pullbacks. And some of the big, huge winners from years past were also Landry light pullbacks. So it amazes me how something so simple can work. And if you're newer to trading, use something like Landry pullbacks, just that one pattern. Don't use any other patterns, and get good at that pattern. Find some setups that work, but make sure you play devil's advocate and find a bunch that fail miserably. Also pay attention to market conditions. Last week, for instance, I talked a lot about market conditions and then my stock selection process during those market conditions. We went short, we went long, and we might have gone short one more time. And the market, even though it ended higher, was just kind of all over the place. And that's important. And somebody had pointed that out years ago. I think around the time of my first book, whenever I wrote that, 97 maybe? I forget when I wrote it, 98, right before the greatest, right during or before the greatest bull market in history. So I look like a genius. Some guy came up to me at the conference, that pullback thing you invented put both my daughters through college. It's like, well, thank you. I didn't invent the pullback, but I appreciate it. Anyway, so this is SMR. Now, something I want to show you with this discretion-wise is the entry was here and stop was here and IPT was up here. Now, notice that the day before, and if you go in and look at the archives, and I think I updated them a few days ago, so they should be there. I had some website issues, so I'll have to double check, but davelandry.com/archives, and you'll see on that particular day, I was like, okay, guys and girls, we're getting close to the trigger here, so watch for an opening gap reversal tomorrow. If a market gaps, let's say your entry's here and it gaps above and comes right back in, then don't take the trade. Anyway, you can see we did have that opening gap reversal that happened, and then market came right back in. Now, technically, it triggered, and mechanically, I am tracking it in the service, in the spreadsheet, and I am looking to get long this particular stock, but I'm waiting for more of a rally and possibly a trigger above that high. Let me just back this up 1 second. So when you do have an opening gap reversal, let's say your entry's here, like I just said, and you have an opening gap reversal, your new entry becomes right above that high, that little pivot high. That would be your new entry. That's also what I call a trend pivot pullback. And of course, in this case, it's also a Landry-like pullback. Lows were greater than the moving average for a long time, and you pull back the moving average, Landry-like goes back to 0. Now, let me show you what happened on an intraday chart. This is a 1 minute chart. And I was a little distracted around the open for whatever reasons. And by the time I looked over to this SMR trade and figure out where I need to get in, if I need to get in, I saw it was negative on the day. I'm like, okay, well, that one didn't trigger, and it was down substantially. So I was like, well, it doesn't look like it's going to trigger. So I didn't bother taking the trade. But ideally, I should have been. So I'm kind of admitting guilty. But ideally, I should have been watching this. So we opened right around here, and it had a little fast pop on the open. And this is a tricky one. If you have, I wonder if I have a visual aid here. Let's say, I don't know if you can see this or not, but let's say you had an open like this, and then the price bar is like that, okay? So the open is the high tick of the day. Then that's a no-brainer. It comes right back in, okay? In this particular case, you had a bit of a fast move. Now, a little bit more advanced technique, but sometimes you'll have this super fast move on the open. The stock will just like skyrocket and then immediately come right back in. Those are a little bit harder to trade or use discretion on, I should say, because you need to take more of a go or no-go approach. You don't want to chase it too much, but then you also don't want to miss it. So that's a little tougher to do. But if you get kind of an opening gap reversals, okay, this thing looks like it's trying to take off, and then it comes right back in, then no capital gets put into harm's way if you're applying a little bit of discretion. Now, if you're newer to my methodology or newer to my service, I actually recommend you trade things on more of a mechanical basis, and that way you get the reps in and you get a feel for things. Longer term, you'll do just fine, and discretion it's another decision added to the process. Every decision you make adds a lot of stress to your life. And I heard on the radio a couple days ago, we make like 20,000 decisions a day. And I don't think our brains are wired for that. As I think I've said before, I started listening to this book a while back called Limitless. And I think the guy's name is James Quick or something Quick. And I was really enjoying it. The only thing I didn't like about it, not to beat up this guy, but the only thing I didn't like was like, it was a lot of, I'm going to tell you what I'm going to tell you. And I hate when a book does that. I've got another book around here, and I'll probably finish it eventually. I forget the name of it because I threw it against the wall. But I was 56 pages in, and he was still telling me what he's going to tell me. So I'd rather you just tell me. But anyway, one thing good that I did get out of the book, and I don't know the exact stats, but the amount of information we process in one day is more than people in the 1900s, early 19. Well, I'm from the 1900s, as Nate Bargatze would say. But the amount of information we process in one day, and I think he was talking about the early 1900s, would be more information than somebody would process in their entire lifetime. Now, if you understand a little bit about evolution, that 100 years or so isn't a long time on an evolutionary standpoint. So our brains haven't caught up to this crazy world we live in. So there's a lot going on. There's a lot going at you. And so you need to minimize those as many decisions as possible when it comes to trading, and try not to do too many things at once. Where was I going with all that? I forget exactly where I was going with that, but there's a lot that we're being bombarded with. And I think if you do early trading, maybe that's where I was going. You have to do things a little bit more mechanically, and then over time work into some of these discretionary techniques. But anyway, long story endless, you can see gapped open and made this quick little pop. Now that's a 1 minute bar, okay? And I didn't have a tick chart. The tick chart would be even better because this happened so quickly. I don't know how many seconds that was on that open. Like I said, the market opened and it seemed like I had it in my watch list, and when I looked at it, it was already negative. So it came in fast. But anyway, it came right back in. So that's a case where you could apply a little bit of discretion. Now, one thing I did want to mention earlier too is that there's an upside and a downside to discretion. Okay, let's say this thing triggered on a mechanical basis as it did. Okay, and then you said, well, you know what? Big Dave says longer term discretion is going to pay off and help me miss some of these trades, such as this, potential losing trades. It's not a loser yet. Let's see what happens. But anyway, let's say you decide not to take the trade. You see that market come in 2 points. You're like, aha, Dave's right. I missed a potential stinker here. Well, the next day you come in and it's up 10 points. It's something that you have to live with. And I think that's where I was going with that decision thing earlier, is that we have to make all these decisions, but we also have to live with them. Anyway, here's another mystery chart. This is grab. And you can see kind of a gradual uptrend here, and then it kind of shot higher. This is a pattern I call accelerating momentum strategy. Most of my patterns, except for the only one I can think of off the top of my head, would be the TFM 10% system and the buy at B in IPOs. Other than those two patterns, everything I do is kind of a bastardization of the pullback, so to speak. So this is an accelerating momentum strategy, and it's also a bit of a TKO. So you can see nice wide range bar down, and entry was here, stop is here, and then initial profit target is up here. So it did trigger. We'll see what happens, and I'll follow up on this in coming weeks. By the way, the open portfolio, not too pretty right now, so we'll have to see how it shakes out. Which one took off for a while? Wolf took off, but he came right back in. But I'll follow up on that too next week. Good, bad, and indifferent. Another accelerating momentum strategy type of setup. We had this nice little, what I call a textbook TKO. Textbook TKO is when you get this big wide range bar, like bam, down, and it knocks a lot of people out. It sucks in a bunch of shorts. And the beauty of it is when a market gets hit that hard, sometimes it just continues to implode, but that doesn't do you any good. But what it does do you is it keeps you out of that market. No capital gets put in harm's way, right? And if it does come all the way back up to trigger, and this entry was actually a little bit closer than I have it here. I think when I updated the chart, it moved it up. Anyway, if it comes all the way back and triggers right here, then there's a good chance that the shorts are getting squeezed out and people that got knocked out might be trying to get right back in. And there's a lot of other psychological things that are happening, and go in and watch some of my presentations and TKOs for a lot more of that. And that's why I like that textbook kind of TKO, because it sort of works or it don't, type of thing. But anyway, I decided with this one that I removed it as an official recommendation. I really wanted to see this thing just knock out and come right back up and trigger. And now it's starting to look like it could be in a little bit of trouble. Okay, so just want to show you that I did mention this particular pair. I'm kind of shifting gears and show you some crypto trades real quick. But I did mention this. I try not to show you anything that I don't mention either as a direct recommendation to service or in Facebook for something like crypto and sometimes occasionally stock setups and IPOs and such. But anyway, so I did mention this A8, and the entry was here, and then the initial profit target. I get asked this a lot. Right now in crypto, as I've said ad nauseum, I'm just taking a 20% profit. And sometimes you could, as you can see, this thing just hit that in the first day in. I don't think I was in it that long, and this thing popped up and hit my initial profit target. Technically, I probably should be eyeballing these things a little bit more and possibly using historical volatility, but I imagine they're just all so stupid crazy. Who knows what the HV would be? The HV would probably be through the roof on all these. But anyway, you can see it popped up, hit the IPT. Unfortunately, I got shaken out when it came back in. I went ahead and exited and got out of the way just in case it came right back in. Now, as I'm doing my charts tonight and earlier today, one thing I noticed is that in a lot of these ones that really took off, if I'd have just hung tight a little bit, I'd have done exceptionally well. So you can see right here, I got in here, okay, the red is the entry and the green is the IPT. And I suppose when it went back to a losing trade, that's where I got out. But in hindsight, I probably should have come back after this one right around here. And there's not enough time in the day, but if I go back and look at that particular day, probably all the crypto was blowing and going. In fact, that's probably the day I got long Ripple, which I'm still long, and I'll show you that one when we get to the live charts. But anyway, it's one thing that has kind of fascinated me. Not that I would want to throw caution to the wind, but maybe I need to think about a way to possibly stick with these a little bit longer. Now, once they blow 100% or 200% or whatever, then I give them a lot of wiggle room and I let them go. But when you just, sometimes you have that one and done move, you just pop up and hit that IPT like this one did, and it comes right back in. A lot of times you need to get out of the way. And by the way, and we'll get to live charts, we'll take a look at it again. Sometimes you just buy the ones that are going straight up. Boy, to my regret, in last week's Dave Landry's The Week of Charts, and I almost bought it doing the webinar, but it's like, let me just finish up the webinar and, let's not trade doing the webinar, but I think it was B&T. We'll take a look at that one. It was going straight up. I'm like, that one looks pretty darn good, and I didn't buy it. Every now and then I'll buy them in the webinar, but last week for whatever reason I didn't. Anyway, I'm just taking really small positions in these things. I just put $1,000 in it, and you can see the IPT, which is 20%, would mean I'm up $200. Okay, and Coinbase has, I would say, bad commissions because I go back years ago. I remember $60 commissions, in and out on trades, like $120 round trip, and you really had to be a pretty good position trader with those kind of commissions. So $3 or $4 ain't gonna kill you, but I guess percentage wise it's sizable. But anyway, you could see that I was looking for that 20%. So 20% on 1,000 would be $1,200. So half came off, so roughly $600. You can see on the remainder I got about $44. So I hate to do fuzzy math too much, but you do need to look at things. You have to realize that's a pretty good move. $141 in less than 24 hours. That's better than poking the eye. And since crypto's open 365 days a year, if you did every day, it'd probably be like, I want to say like $50,000 in change. So that's much better than a poke in the eye. But obviously they don't always work out like this. So these other trades in here, so everything in blue, and I'll explain this in a little more detail, but this is the watch list that I published a couple days ago in Facebook, in my Facebook group, okay? And had some interaction with you guys and girls, or mostly guys, I think, in this particular case. But anyway, so I did show that list, and then I think I mentioned somewhere I got long Ondo, and it hadn't hit the IPT yet, so nothing to brag about just yet. But my entry was there once again at the IPT of 20%. I'm going to take half. And I think that as some of these markets mature, like obviously at Bitcoin, even though it's still pretty volatile, 20% would be a $20,000 move. And that's probably not going to happen because that market is becoming a little bit more efficient. Okay. And part of the problem with the efficiency in Bitcoin is that you've got all these derivatives out there and you've got all this paper Bitcoin. Paper Bitcoin means like maybe these derivatives or ETFs, do they really have as much Bitcoin as they say. And the analogy, and I know you guys are sick of me saying this, as I've said ad nauseum, but the analogy is all the gold in the world would probably fit in my backyard. I think it would fit an Olympic-sized pool. I don't think my backyard is that big. I usually live with 6 acres. It'd fit my old backyard for sure. But somehow you've got all these contracts out there that are probably 100 times more than what's actually physical gold. So even though there's only so much Bitcoin to go around, I think there's a lot of paper Bitcoin, so to speak, out there. But that's gonna ebb and flow a little bit over time as some of these exchanges go out of business that were bucketing the orders and all. That's a different conversation altogether. But anyway, I think Bitcoin is definitely becoming a more efficient type of market. An inefficient market makes a 100% move overnight or 20% move in an afternoon, like the one I just showed you, A8, I believe. And that was not priced in. Okay, so if everything is priced in, some of these companies have 1,000 analysts looking at them, and one saying buy and one saying sell, and you've got all kinds of pension funds and all this other stuff, and everybody kind of fights it out. And what happens, you end up with just a choppy market without trends. So it's a very efficient market, so to speak. And by the way, efficiency and inefficiency is something that I think you really need to study, especially inefficiency when it comes to markets. But right now, these shitcoins, SHYT, are wildly inefficient, and there's just a tremendous opportunity here. Anyway, so here's Link, which was part of this list here. And you can see once again, this was more of a pullback. Now, again, a lot of times I'll just buy these things when they're going straight up. I recommend you not do that in stocks unless you're going to buy 100 of them. But in these altcoins or shitcoins, a lot of times you can just buy them as they're going up. And they make these tremendous moves very quickly. So entry was here in Link. My IPT was 20%, and again, took partial profits there. I put a limit order in at the initial profit target. So a lot of times I wake up, and the first thing I do, of course, I like to tell you that I stay analog. I try to stay analog, but nowadays I do, while I'm making my coffee, I do take a look at the shitcoins to see what's happening and see if I hit any IPTs. Also, one more thing. When I hit the IPT on these things, I take out a little crumb and I put that into Bitcoin. I pretend that there's a $25 commission or haircut, however you want to look at it. And every time I get a winner like this, I take $25 and stick it into Bitcoin. Now, if like the Ripple, which we'll take a look at in 1 second, or it might have been Stell, I think it was XLM, something like that just kept going and going, like 100, 200% move at every centennial mark, so to speak, percentage-wise, I take off a little bit more and put it into Bitcoin. And all those little crumbs are starting to add up. Now, eventually, I would have to manage that Bitcoin position as opposed to hodling it, and I get it. But for now, I think it's kind of fun to take these shitcoins and turn it into something that's a little bit more real. It's not tangible, but it's a little more real. Anyway, I'm just having a lot of fun with that. I know I'm a nerd, but I woke up this morning thinking, Dave, the things you wake up thinking about have changed, But I woke up this morning thinking about that if you never traded in your life and you wanted to learn how to trade these shitcoins, okay? And I know a financial advisor would just freak out if he heard me say that. But if you want to be a trader, okay, these markets are wildly inefficient, and the bull bear cycles, and we're gonna get to this in 1 second, a little spoiler alert. But the bull bear cycles are so compressed, and I'm just fascinated with how this market works. And I'm trying be the key word there, I guess, to see if I could parlay these little tiny accounts that I had left over from some other trading I did a while back into much larger accounts. And it's been a lot of fun. And the little crumbs going to Bitcoin, and that's kind of like, long story endless, as I've said 1,000 times, that's because years ago I looked into the mining of Bitcoin because I'm a nerd, and I realized how impossible it would be for a private individual to do mining, especially from that point forward. It became more and more difficult. But I got to thinking, okay, well, what's in my wheelhouse? Okay, so to run miners, I'm a tech nerd, and I do have a degree in computer science, which I haven't used a lot of lately, other than occasionally program an indicator. It's like, but it's out of my wheelhouse to do that kind of thing. But what's in my wheelhouse is, well, it's trading, and trading is trading. But anyway, getting back to what I was saying earlier, just to close a loop on that, I think if you would do ERTA trading, you could take a small amount of money, maybe do $100 in each potential setup, and then make sure you get the reps in and use strict money management. Make sure you have some sort of system in place. When they're going straight up, just buy the ones that are going straight up. When they begin to pull back, then trade more like the core methodology. So I kind of flip back and forth from the core methodology when they pull back, trading something like Landry like pullbacks, back to a breakout trader. Now, breakout trading in stocks, unless you're going to trade a lot of them, as I'll show you in 1 second, they tend to often fail miserably. So you're going to have to trade quite a few. You got to realize these altcoins right now is like 1999. I don't know who's here old enough to remember. John, you look pretty old. You're probably old enough to remember. You're an old dude like me. Old guys rule. That's good. And a few other you guys here, I think, are close to my age, which is old. But we remember 1999. It was just a fantastic market, and I think that's where we are now in the altcoins, especially since Bitcoin is flirting around that 100K. Anyway, shifting gears back to stocks real quick. We'll come back to crypto in a minute. TFN 10% system. Let's do a brief update on this. As I said ad nauseum, these zone lines, 0%, the top of the zone, the top of the green zone, would mean that the market is at 50-week highs. And you could see, all right, John, yeah, you got, I got 3 years on you, John, but you're old enough to remember. John's from 1967. I knew you were a little younger, but not much. Anyway, you can see the top of the green zone up here. We just hit a 52-week high last week. Okay, and close there. You have to close there. The 5% line, as I've said quite a bit, was inspired by one of you guys who was telling me that he likes to get out. Jeff, he likes to get out of the markets when it's 5% or more away from that 50-week closing high. And the whole system is based on a 10% drop below the 50-week closing high. So that would be the top of this hot pink zone. So again, green, you're within 5% of the 50-week closing high. This light pink, you're more than 5% away from the 50-week closing high. And then the hot pink, you're more than 10% away from the 50-week closing high. Anyway, there's the rules. It's a simple little system. And, I said I wasn't going to go through all the details, and here I go. The bottom line is, as Ian McDactyfee used to say, he talked about the diaper change moments, and that's when the market implodes on you and you just sit there and just freak out. So you want to try to avoid those the best you can. And I figured that if a market, just TA 101, right? If a market's going to lose half of its value, it's going to lose 10% first. So 10%, good round number to get out. The 50-week moving average is just a whipsaw filter. And again, there's your rules. If it closes, I'm pointing at my screen. If it closes below the 50-week moving average and it closes 10% or more away from the 50-week closing high, and this is based on a calendar weekly chart, and knock on wood, this system would have, and again, I forget when I originally published this. One day, I'll probably never get around to doing it, but I need to go on YouTube and see when my first video showed up there on this, or maybe even my website, do a search on it. But anyway, since it's been public, it's done fairly well. And the other thing that I want to point out is, now a lot of it's hypothetical, going back it's probably been in public domain 7 years, maybe longer. But going back before that, it would have kept you out of every bear market in history, and it's kept you out of every bear market since. So knock on wood, there's no guarantees. But one thing that's I'm a little cautious about is it is on a calendar basis, and obviously bad things could happen in the middle of the week. Buys are a little more stringent. You need 2 bars of Landry light above that 50, and you have to close within 10% of the 50-week closing high. So that was our last buy on the P's. And your sell would be below the 50-week simple moving average and 10% or more away from the 50-week closing high. Now, what will eventually happen if we stay in this nice bull market we're in, especially on a weekly chart, is that 50-week moving average, due to the drop-off effect, you're dropping off lower prices back here, and you're adding in higher prices, much higher prices, okay? In the case of the NASDAQ, 65% higher prices, which I'll show you in a second. So that moving average is going to start catching up to price. So that moving average will eventually and likely be above the 10% line. So the sell would be below the 10% line. Right now, because the moving average is below the 10% line, your sell would be at the moving average. But when it crosses above, it would be back to the 10% line. And hopefully that made sense. If it doesn't, go in and watch the 1,000 videos I have in this silly little system. As I said ad nauseum, just for S&Gs, I thought I would buy 100 shares based on this signal way back in March of 2023. And so far, it's been a pretty good run. Now, the stop would be way down there at the moving average. Again, the moving average is below the 10% line. And just based on this mark to market, which I grabbed earlier today while the market was still open, it's a $207 gain and change, and that's a 65% move. I never dreamed it would go that far. So if you multiply that times just 100 shares, that's $20,000. And I know I've showed the trade before, but I just grabbed this screen capture to show you 100 shares. It's all I bought, and that's my cost basis over here, $31,000 and change. I mean, that's a substantial amount of money to put up, but it's only 100 shares, right? And then you can see that's the gains on that position so far. And that's grown, that 31,000 has grown to 52,000 and change, so, or 32,000 round numbers. So that's fairly substantial. Now, as I mentioned last week, the drawdowns have been fairly substantial with this system. Like any long-term, any pure long-term trend following system will have these really ugly drawdowns. And if I stop out, I'm going to give up 6,469, which is substantial. You know, nobody wants to do that, but it's like the hokey pokey. That's what it's all about. That's what trend following is all about, being able to live through these drawdowns. Let's talk about the Landry 100. As I've said quite a bit, this is kind of a proof of concept type of thing. Like, you want to buy markets that are going up. If they don't go up, don't buy them. And all of these were bought at brand new highs, okay? And you can see this one had a pretty significant run. And actually, it went up over 300% before coming back in. Now, I don't want to make it look like it just always goes up, because, you know, sometimes it ends really badly. And this kind of exemplifies what could happen sans a crazy bull market, okay, like we have in crypto. This kind of exemplifies what could happen is this stock, which is the Landry 100. Now, I don't have any stops in place on this. This is all hypothetical. Everything else is real trading. This is hypothetical. It's just kind of an experiment, and it's been a lot of fun. I know you want to party with me, but this one got whacked 85% the other day. Well, shit happens, right? Now, what's interesting is here's a spreadsheet where these are closed trades, so to speak, okay? Everything is done on the closing basis, right? So you can see that was a 79.67. 10K goes into every one of these. I'm not parlaying or anything, although down the road it would be kind of fun to do this. And I think it'd be fun to do it real money. The only problem is you end up in a choppy market or extended bear market, and there wouldn't be much to do, which I guess would be okay. Just sit and bide your time. But anyway, out of the 10 grand in that slot, you can see each slot, there's 100 slots at 10 grand, $1 million total. That would be a $7,967 loss. Now, the good news is, obviously, we can't lose more than 10K, okay? The good news is we let the upside be unlimited, okay? Now, one thing that I probably should do, because of that APP I showed you earlier, I hope I have the other chart in here. It might have not made it in. As I've said before, maybe when some of these go up 100%, take off half, or just to throw a little bit money management into this thing. But you can see this one today was another one that got a haircut. Look at that, a 50% haircut. And this kind of exemplifies what could happen to you if you're not buying enough of these. And I think it was Jeff or someone in here was talking about statistically how many we'd have to buy. And I'm not sure that math works. Statistics doesn't always work in markets. And statistics are easy for me to say. Statistics are worthless. 75.4% of all people know that. But anyway, so there's a $5,000 50% haircut. But you can see that this one came out actually on recently, yesterday, in fact, or is today 12th? Yeah, today's 12th. So that one came out. That's an $8,200 gain. And then this one was a decent $3,000 gain. So that kind of takes care of that. All right, just real quick, got a quick question on from Mace in Estonia, and he wanted to know about the colors in my crypto watch list. So everything that's red, I am long, and this is a screenshot I took about an hour ago. So I'm long Blur, Gala, and Ondo. We just talked about Ondo. Everything in red, I'm long, but it has not hit the initial profit target. Everything in blue, like the big blue arrow, think of it, the big blue arrow. If you see something in blue, that is a watch list. And everything in green, I'm free rolling on. So the Ripple that I mentioned earlier and the link that I talked about a minute ago, both of those hit the IPT. Now, I think it was whenever I put out that Facebook post, I had about 8 of them or more that hit the IPT, and it was pretty nice just watching them go up. And then I knew it was going to get whacked, and then I got taken out of those, and then I just started the process again. So I'm free rolling on those down here. That means that I'm kind of playing with the market's money, so to speak, and hang on as long as I can and eventually get out. Now, anything in cyan, it's kind of like my benchmark watch list, and usually I just have Bitcoin, Ethereum, and Ethereum Bitcoin in there just to keep an eye on those benchmarks, so to speak. Crypto pairs, excuse me. Now, eventually, maybe if some of them rise up and become viable, I mean, everybody's looking for the next big thing. And as a trader, just forget about that. Just trade them, okay? Now, in an ideal world, my fantasy would be to catch one of these and ride it forever and say, oh, yeah, I was in Ripple when it was 2 cents or whatever it was. But the reality is the ebb and flow is going to probably take you out much sooner, but that's okay. You can make a lot of money in the meantime. So that answers that question. Okay, yeah, Brian, we'll get to that question on breath in a minute. That's interesting. All right, lately I've been doing a series called A Million Little Things in No Particular Order. And again, as I say each week, everyone thinks that something's going to happen. You have a big epiphany, all of a sudden you're a trader. Well, it doesn't work that way. That's not how this works. That's not how any of this works, as it was explained to Beatrice a while back. You probably don't remember that commercial. But it's a bunch of little things. And boy, I tell you, from a selfish standpoint, this series has helped me out a lot because I recognize how many little things over and over and over are required to be successful as a trader. And I make a lot of mistakes, believe me. And I just constantly remind me of all these little things. Now, last week I mentioned, I don't know if I put a number on it, but remember that cash is not trash. One of my clients, he said he was with me on and off for 20 years or so, 20, 25 years. And he just come back recently and he's like, well, only had 5 setups that triggered in 5 months. And I did a presentation last week talking about quantity versus quality. And that I was actually kind of proud during that period of time, the most amount of capital in the hypothetical portfolio that we put on the line, in margin at least, was 13,000 and change. So let's just round it up to $14,000 out of 100K. So we stayed 86% in cash during that whole period. Well, the market was kind of all over the place. If you look here and here, you're like, well, David's up 9%. Yeah, it was up 9%, but it went down 10% first or 8% first or whatever it did before it went up 9. It had a bunch of zigs and zags in between. Anyway, so remember that cash is not trash. And I threatened last week to come up with a bunch of Livermore quotes, but I've done that ad nauseum. He talks a lot about patience and letting everybody fight it out. And by keeping your powder dry, when the time comes, you're able to act. And somebody in last week's webinar said they made 65% one year because they sat around in cash because they weren't seeing any opportunities and they just kept their capital out of harm's way. And then when things started to set up, they had the money and they were able to put that money to work. All right. One thing that I've been thinking about a lot lately, and believe me, in stocks, I'm probably not this philosophical because it's real money, but in crypto because it's just fun and games. And again, I'm trying to see if I could parlay, and I'm dying to not. I really want to throw more money at it. We have one of the guys in the group, he's throwing a lot of money at crypto, and it's like, oh man, I feel like I'm missing out. But I'm just having fun with that. But be fascinated with markets moves, even those against you. And this is that post I showed earlier. And this was 2 days ago, and I said, I've been unloading crypto all day. I'm cool with that. I like the compressed bull bear cycle. So I got long a bunch of crypto, and I'm not happy to get stopped out. But I know that the market's pulling back, and I'm a pullback trader. So I'm going to have possibly a bunch of more opportunities. And now you see I've got 2 of them free rolling again, okay? That A8 didn't quite work out, got knocked out of that. But was it Ondo? And then that Blur might take off, who knows? So be fascinated with how the market moves. And one thing I was thinking about as I'm going live is watch your phraseology. And I'm as guilty as anyone, but watch how you talk about the market. Try to say that's interesting versus drop an F-bomb. I know it's hard not to drop an F-bomb. I talk about dropping them so many. Mike Peterson sent me this. It's an F-bomb. I used to drop it, but it breaks stuff when I drop it. Now, one thing I've been thinking about a lot, because I've got a little disruptor in my life, is number 74,155, identify, accept, and embrace life's disruptors, okay? I talk a lot about external or extraneous influences, okay? And a lot of those extraneous influences are sort of financial related, whether you have money or need money, kind of like the Tom McClellan quote from his mother Mary, and his late mother Mary, I should say. And paraphrasing, some people buy when they have money, some people sell when they need money, and others use more sophisticated methods. And her point, the quote starts out with, everybody uses timing in their investment. So that's kind of an obvious external influence, okay, or extraneous influence that has nothing to do with the actual market. It has to do with your financial well-being or not. Okay, if you're getting beat up, if you're over trading too much, I've been firing off too many day trades lately. And last night I had an epiphany. He's like, Dave, you don't have to day trade. I'm like, huh. I came in today. I was like, okay, well, I went like 7 hours without a trade and took 1 or 2 little trades, and I think I lost $12 on today. Well, it's a lot better than losing a lot more, right? Anyway, you have to. That point I was making there is like stay in your wheelhouse, and then you have to protect your mental capital, okay? And like I said earlier, with all these decisions and all, you don't want to wear yourself out or burn yourself out unnecessarily. And this is why I'm always talking about these extraneous influences. So a life disruptor is one of those extraneous influences. It's kind of like a subset. So meet Cayenne, and Cayenne, we lost our family dog a couple of months ago, and we probably didn't take enough break between dogs, but it was hard, I guess, because my wife and I empty nesters. It used to be, well, in the country, a dog would walk up and you'd take care of the dog, and the dog would pass and be like, okay, thank God that's over. But we really fell in love with this last dog. It was a house dog, and it made a big difference. But anyway, so this is Cayenne, little golden, and she's had a bit of a butterfly effect on our lives. And the negative is less sleep or broken sleep. Okay, this morning she woke up at 3:30, had to pee, and I really couldn't toss and turn until about 4:30 or whatever, and finally just got up. But that's one thing that's happened. And one thing I was thinking in one of the mini walks that I take her on is that you, just like a professional athlete does some really, really serious training, you have to kind of see yourself as a professional athlete, but you're a mental athlete, and you have to be at the top of your game. You have to obviously watch your drugs and alcohol, get plenty of sleep, exercise. I work out every day, which is something that I used to always joke. I never missed an annual workout. But now it's like, people in the gym actually call me Old Faithful because I'm there every day. But anyway, you really have to treat yourself as kind of like imagine you're sort of an athlete. What are you going to need to do? Well, you're going to have to exercise. You're going to have to eat fairly well, and then again, watch all the other stuff. So negative kind of butterfly effect here. It needs the potty like 5 minutes before the market closes, and sometimes my wife's out on a gig or whatever. She's not here. Expenses and hidden expenses. We kind of knew that, but it's like, the only way to shut her up is to give her this $15 bone, and she could go through those pretty quickly. And you annualize that up, we're gonna go broke pretty quick just on phones, but that's no big deal. Thank you, Brian. Yeah, she's a sweetheart, and she's really being a sweet. She wasn't so damn cute. I'd probably choke her, but she's wonderful. And a lot of time, a tremendous amount of time, and we've rescued, so to speak, a few dogs. The last dog was rescued, was a wonderful dog, but she had her issues, and we'd love to know what the prior owners did to her or whatever. But overall, great dog. But my wife Marcy said she really wanted to start from scratch this time, and I've forgotten how much trouble a puppy is. It really is. There's more chances for the Weedo trade. What's that? Well, as I've said before, for some strange reason, I walk in the office and everything looks phenomenal, and I find myself doing the walk in the office trade. Now, I did talk quite a bit about this in the past, and part of that is related to the hangry judge effect. Usually, a lot of times when I leave the house, I go eat inside. My office is separate from the house. We're a very small house now compared to what we used to have. I used to work out of a guest house, and now I have a separate entrance to my office, but I physically have to leave my office. So when I'm in here, I'm at work, working sometimes. When I'm in the house, I'm home, right? So a lot of times I'd go home, so to speak, eat lunch, and come back in and make a trade. And I eventually realized breakfast too, that it's because I was hangry before and I didn't like the way everything looked, and all of a sudden everything looked great. So that's the kind of thing you have to recognize that might be one of those extraneous influences. But anyway, on a positive note, reduce cortisol. It's been proven when you pet a dog, the dog's cortisol goes down too, and so does mine. It's like when she's not biting the shit out of me. I don't know if Craig's here tonight. Craig's a dog trainer. This dog is pretty much wonderful, but she has like the witching hour, which is around 7 o'clock, where I'm trying to relax after a long day at work, and then this dog just goes into this bite mode. But the rest of the day, she's just rolling over and giving you her belly, and she's just absolutely wonderful, except for this witching hour, and we're working on that. Now, there's a little, at first I'd have to drag her to get her to walk, and now I've got her walking, mainly because the vet tech told my wife, she's like, yeah, I've got an 80-pound golden or whatever, she has a lab, and she says she has to carry it out of the house because she always carried it out of the house as a puppy, and she never trained it to walk. And so now the 80-pound puppy won't leave the house unless she carries a dog. I didn't ask her. She's probably a sturdy girl to carry an 80-pound dog around. So I found well, I knew what it was, but I found it works nicely. There's a bike trail in my backyard through the woods, at least. And then on the other side of that, there's a horse trail, and it's about a half-a-mile loop. So I'm getting more exercise, and I've actually dropped a few pounds because it's about a half a mile. Like I said, you do that a couple hundred times a day, it begins to add up. So I'm definitely getting more exercise. I'm also getting out in nature a little bit and listening to some birds and squirrels and stuff. So I would say you want to identify, accept, and embrace these life's disruptors. And this is just, I wanted to use the puppy as such a minor example that it has such a big butterfly effect. But like right now, Marcy's parents are aging, and there's a lot of issues that are going on there. So that's always in the back of both of our minds, and that's causing a lot of disruptions. Anyway, today they lost their cat, and I'm thinking, that's a good thing, right? No, please don't write me. Just not a cat person, sorry. So anyway, so how do you identify, accept, and embrace all these things? Well, the answer lies in the morning pages. If this dog, Cayenne, would only let me do my morning pages, and she's getting better, but it's a process. But the morning pages is something that'll change your life. It'll change your trading. I would urge you do it. And just real quick, without beating a dead horse in that, as I normally do, you just wake up, try to stay analog, as much analog as you can, meaning don't get on Twitter or X or Facebook or whatever, and don't check your emails and all this other stuff. I check futures and crypto. I know. But other than that, I do those two things. I try to keep it in less than 2 minutes, and then I just try to stay as analog as possible. You're not trying to win a Pulitzer Prize or whatever. You're just trying to get some thoughts out. Don't worry about grammar. Don't worry about spelling. Don't worry about what you're writing about. Just write about the damn dog. You know, how do I get this dog to stop biting me? During this witching hour it goes through. But those morning pages, again, will absolutely change your life. I tell everyone I meet, including some people on the street and people at the gym, you need to do these morning pages. And so far, nobody has actually, to my knowledge, done them. And that's the first thing. If you wanted me to work with you one-on-one, that's the first thing I would tell you to do.